What is happening, investors? It is your boy Jack. I am not a financial advisor, and today we have three very exciting growth stocks to speak about. And I mean, who doesn't love a good growth stock? I'm not going to waste any time here. I'm going to tell you right now the three companies we are going to be having a look at today. The very first company of today is Upwork. If you don't know who Upwork is or what they do, that's okay. I'll explain it in today's video. But you more than likely are familiar with a website or a company called Fiverr. They are very similar to them. Second up today, we have a company called Hyliion. Okay, you all know who these guys are. Ticker symbol SHLL. There is an awful lot of hype behind these guys, and I want to give my 2 cents on the company. And the final company we want to speak about today is Galactic, a company I went ahead and picked up 25 shares in last week, just opening my position, and I do plan on buying more because they are very exciting to me. So they are the three companies we will be speaking all about today. Right before we get into our first company of the day, Upwork, can I please ask you to smash this video a like? It helps me out absolutely massively, and these videos take a long time to make. Secondly, we are on the final stretch to 10,000 subs, people, so if you're new around here, please hit that big shiny red button. It would mean so much to me. And thirdly, please drop me a comment down below. Let me know your thoughts on any of the companies that we cover today, or any other growth stock you will be keeping an eye on in July. And let's not waste any time, let's get straight into the first company of today, Upwork. So who are Upwork and what do they do, okay? In-demand talent on demand. Upwork expertly connects professionals and agencies to businesses seeking specialized talent. So essentially it's a place where you can go and outsource freelancers. And they offer a whole range of different types of freelancers. So web, mobile and software development. If you want a website made for yourself, you can go onto here and get someone to do that for you. They also have things along the lines of design and creative. Say for example you wanted somebody to edit your YouTube videos for you or to make thumbnails for you, you could find someone for that here. Writing, sales and marketing, admin support, customer service, data science and analytics, engineering and architecture. If you've ever been on the website Fiverr, straight away I feel like Upwork just has a much more professional, much cleaner look to the website. I personally would feel more confident buying off of Upwork than Fiverr right now. And the services that these people are providing are services that I only see gaining a lot more popularity in the next few years. And as of right now, it's a lot of individuals who would go and get work done for themselves here, the likes of me or you watching this video. Again, if I was to use a service like this, I could get somebody to edit my YouTube videos for me, I could get somebody to make thumbnails for me, I could get somebody to make me an intro or an outro, you know, so an individual getting another individual to do a job. But very soon, a lot of massive companies are going to have a lot of their employees working from home, even when the virus is completely gone and life returns to normal. If we take a look at Facebook, for example, okay, they're one of the major tech companies who are going to let people continue to work from home forever, even once the virus is completely and utterly gone. So I could see the likes of Facebook and other absolutely massive companies coming over to Upwork and getting some freelancers involved, which obviously would be very good for Upwork and ultimately very good for us if we were to be invested in the company. So the biggest, most established company we can compare Upwork to is obviously Fiverr, okay? And right now, if we just have a look at Upwork, they're trading at about $14.23 a share, and we have a market cap of 1.64 billion. If we have a look at Fiverr, okay, we can see we're currently trading at about $70 a share, and they have a market cap of 2.27 billion. So both of these companies over the last 3 months or so have seen some absolutely incredible returns. If we start with Upwork, okay, we can see we had lows of about $5.40. And right now, obviously, it's all the way up to $14.24. So that's been some immense growth. We look at Fiverr, they were down around $23, now all the way up to $70.59. Insane growth. Now, the large majority of the time, if you want to get into a growth stock in its early stages where there's still an awful lot of long-term potential, there's going to be a considerable amount of risk that you're going to carry as well. And Upwork is definitely no exception. First of all, the company isn't profitable, as seen by their negative EPS of 19 cents right here. Now in the last year, they have had some positive EPS, but look, it has been tiny. 0.02. 0.03, 0.05, okay, and now it's in the red and it's expected to stay in the red. Their revenue has been growing at a fantastic rate, okay, absolutely fantastic rate, but the earnings haven't really done anything, okay. If anything, they've gotten a little bit worse. But when we have a look at the balance sheet, we can see that these guys can afford to, you know, have a slightly negative EPS for a while. Total current assets are at 312.5 million, okay. Total assets are at 482.1 million. Current liabilities are at 185.6 million and total liabilities are at 223 million. So it's a very, very good balance sheet. And it would give me confidence that these guys can afford to stay in a negative EPS. And right now they are making more money. Remember, okay, with these growth stocks, if you're to invest in them early, they're going to carry a substantial amount of risk. So the fact that a company has a negative EPS, okay, in a literal sense, obviously is a bad thing. But in a practical sense, when we have a look at a balance sheet and we have a look at how much more money they are actually making, it's not the end of the world. All things considered, I could definitely see these guys being profitable very, very soon, and these could be one of the very few companies who could benefit from, the new stay-at-home model. I've brought up this example with Amazon before, okay? But nobody got rich investing in Amazon 2 months ago, okay? People got rich investing in Amazon 20 years ago, all the way back here when it was down, even before there, it was all the way down at $4 a share. Those are the people who took a risk on a company, and those are the people who benefited absolutely hugely. The same could be said for companies like Tesla, when not a lot of people believed in them when they were at a $200 share price. People thought the valuations were absolutely ridiculous, and now they've broken over $1,000. So at this current price of $14.24, I'd probably be happy to open a relatively small position, and then if I see them go down towards $12.50, $13, I'd like to buy some more. And analysts as of right now, in general, hold a recommended rating of a 2, which is a buy in regards to Yahoo Finance. And their price target is at $12.71. So somewhat in line with what I think about the company. But that was Upwork. As always, if you are interested in the company, please do go ahead and do a lot more research into them. Okay, next up we're having a look at Hyliion, or Hyliion, whatever you want to call them. I call them Hyliion. So in order to invest in this company right now, you have to invest in the ticker symbol SHLL, which is Tortoise Acquisition Corp. And since the 18th of June, these guys have gone up 211%. So the Motley Fool has an incredible article right here that makes what is actually happening really simple to understand. So this is where we're going to start, and then we'll go a little bit into more what Hyliion actually does. So what are they actually doing? Okay, they're creating electric and hybrid powertrains for heavy trucks. They've seen an opportunity to apply hybrid electric technology to existing Class 8 tractor trailer trucks in a cost-effective way. This is important, that what they're giving people can go into existing Class 8 trucks. You don't have to buy a completely new truck, but we'll get into that later. So the company has 2 main products right now, okay? One, which is shipping right now, this is in production, okay, is a system that turns an existing diesel-powered heavy truck into a hybrid, increasing its range and efficiency. It can be retrofitted to existing Class 8 trucks from any of the major manufacturers. That is massive. You take a look at somebody like Nikola, okay? They don't have anything right now. They have no products. You can't buy one of their trucks. They have no charging stations. They have nothing. Hyliion, on the other hand, has a product that is ready to go, already has charging stations. And while they are going to be making money off of it, they're also working on their own standalone brand new Class 8 trucks. And that is its second product, called the Hypertruck ERX. It's a complete electric drivetrain for Class 8 trucks with a twist. It doesn't require a huge battery pack. Instead, the Hypertruck system is designed to be recharged while the truck is underway via a natural gas powered generator or a hydrogen fuel cell. Okay, so here is a few really important points on what makes Hyliion so attractive in comparison to both Tesla and Nikola. So unlike the much talked about Tesla Semi, Hyliion's Hypertruck system doesn't need a large and heavy battery pack, which we just said, that would reduce the truck's overall hauling capacity. Unlike battery electric trucks, trucks with the Hypertruck powertrain can recharge via refueling in a matter of minutes. And unlike hydrogen, there's already a natural gas refueling structure in place in the US. So that's the basics of what they do, and that's the basics of why they are attractive to a lot of people as of right now. EV stocks in general are going absolutely crazy right now, whether it's Tesla, Nikola, or these new guys. So a few quick points to note, okay, in regards to the price and market cap and whatnot, okay? Obviously, this was at 10.22 before the merger happened. Currently, we're all the way up to 31.84. Pre-market is down a considerable amount, and the market actually opens in a few minutes, so we will see what happens. The PE ratio is at 384.87. Doesn't mean anything. The PE ratio means absolutely nothing right now. The market cap isn't even at $1 billion as of right now, so very, very small cap company. Now, Hyliion's mission is to be the leading powertrain provider of electrified solutions for the commercial vehicle industry. So they want to electrify trucking, reduce GHG emissions, lowest total cost of ownership. This is something that's really important, and we will get into in just a minute. There's a strong customer demand, and there's about an $800 billion market opportunity. Massive. This right here is one of the most important things to me, okay? This is the existing nationwide R/CNG fueling infrastructures. This is where people will be able to charge their Hyliion related products. My biggest problem with Nikola when I first started looking into them was the fact they have no refueling stations, and that would take a very long time to build all across a massive place like the US. And then if they want to branch out into the EU, they're going to have to do it all over again, and the barrier for entry there just gets ridiculous. That is not a problem for Hyliion. Class 8 trucks, big massive trucks. These aren't driven around by your everyday person, okay? These aren't, your Sunday drive car. These are used by businesses. And what the businesses want to do, okay? They want to take the option that will be the lowest total cost of ownership. They want to save the most money because then their margins go up. So available today, a diesel versus hybrid electric. A few of these companies versus Hyliion. Upfront vehicle cost, okay? Hyliion's is a little bit more. 7-year total fuel cost, Hyliion's a lot less. 7-year total cost of ownership is less. But things get really exciting in the future, okay? So battery electric, Tesla. Fuel cell electric, Nikola, and our hybrid trucks, ERX. So this is expected to be 2021 for both Tesla and Hypertruck, and Nikola is still, way behind already, coming in 2023. So the upfront vehicle cost, okay? Tesla's the cheapest, then Hyliion, then Nikola. 7-year total fuel cost. Again, Nikola just looks absolutely disgustingly bad here. Hyliion is the cheapest, Tesla is just behind. Now the 7-year total payload revenue lost or gained. Tesla lose $140,000. Nikola lose $52,500. Hypertruck make $35,000. The 7-year total cost of ownership, okay? Nikola, horrific. Nikola will cost you $637,500 over 7 years. The Hyliion truck will cost $279,776. And the Tesla will cost $438,000. Now, I will point out that all of these numbers are coming directly from Hyliion, so who knows. But if these are anywhere near the truth, there is going to be a massive market for this truck. Business owners want to save money. That's what they want to do. They want the best, most efficient options. They have the best range by far. The biggest payload capacity by far. Even bigger than your average diesel truck, okay? The refueler charge time, the same as Nikola, but we've already established they look far better than Nikola and far better than Tesla here. There has been 1,000 Hypertruck ERXs pre-ordered. So we already mentioned the fact that they predict this about $800 billion market. And that comes down to there being 8 million trucks in operation and projected to grow, and 944,000 trucks sold annually. Now here's how things look from a competitive point of view, okay? And if we look at this, the Class A regional, okay? And then there's nothing in hybrid electric or the CNG. And then the long haul, 500 plus miles. Okay, Nikola's the main competitor. We've already established that Hyliion looks an awful lot better than Nikola, and they'll be readily available far before Nikola. And then there's nobody else. Here's some of their target customers. Massive names. If they get the likes of contracts with these names, incredible. So market did just open and these guys dropped 10.21%. And that actually makes me happy because I want to buy these guys very soon. So if I can see some red, I'm a happy man. That brought the market cap down to 833 million as well. To be honest with you guys, at this price, I think it's very attractive. It's one of these ones where there's so much hype behind them, I think it's going to be difficult for it to come back down very far. But with that being said, a lot of people will have already made a 100-200% profit and may be happy to trim or completely sell out of their positions. I told you when I'd be happy to buy the last company. Honestly, I'm not too sure when I'm going to be happy to buy these guys. I love the company outlook. I think there is absolutely insane potential. And if what is expected to come true comes true, this market cap, I don't even know how high it could go. Around this price, I think I am going to be willing to open up some sort of position. Nothing crazy, nothing massive to be honest with you, until I see what happens over the next week or so. And then we have one more company to cover today, and that is Virgin Galactic, a company I did buy 25 shares in last Friday. Now these guys have had a really weird year, okay? They went up over 222% in no time at all. But just as quick as they went up, they came crashing back down nearly 70%, okay? Since this crash happened, as of right now, they're up about 44%. And this is definitely a company who has a considerable amount of risk behind it, but I also just do think that the potential is absolutely immense. What these guys want to do, okay, is they want to pioneer the next generation of reusable space vehicles. They aim to transform the current cost, safety, and environmental impact of space launch. They want to send me or you to space. So how are they going to do this, okay? They say that their first commercial space flights will be of an unprecedented frequency, generating the benefits of rapid learning and improvement. And very recently, okay, we saw that they just had their second successful test flight. And this test flight, unlike the first one in early May, the pilots flew at higher speeds to help evaluate the ship's systems and performance in preparation for the next stage of testing that will involve rocket-powered flights. And the company is in the midst of final testing, but they have yet to offer a date for the start of commercial flights. But even the thought that they could release a date in the near future, that is massive, absolutely massive in itself. And so far, more than 600 customers from around the world have purchased tickets to be launched into the lower fringes of space, where they can experience the weightlessness and get a view of the Earth below. And in addition to those few hundred, more than 9,100 have registered their interest online. And company officials expect the interest to surpass the company's capacity for flights for a few years. Wow. And Virgin Galactic will work with NASA to train private astronauts for orbital space flights. And what they'll be doing is they'll be developing a private orbital astronaut readiness program. Now we can have a quick look at the balance sheet, okay? Small but very, very good. Current assets 475.3 million. Total assets 548.1 million. Liabilities 113.4 million. And we have total liabilities of 136.1 million. So absolutely fantastic balance sheet. Again, it's one of those ones, you're not going to get rich investing in these guys when everything goes well, or if everything goes well and their stock price shoots up. But what will happen is you'll make a lot of money if things go right. And if things go wrong, you lose some money. That's what happens with growth stocks. Obviously, I'm happy to buy at this price. I just bought on Friday. It was somewhere around this price. I think I'm down like 0.5% or pretty much nothing. And they are the 3 companies for today, people. I do hope that you enjoyed today's video. And if you are interested in any of these companies, please go ahead and do more research. There was not enough covered in today's video alone to make a decision on whether or not to buy a company. And also, if you've watched to the end, feel free to go follow me on Instagram. You can drop me a message there. I'll reply to absolutely everybody. So if there's anything you don't want to ask in the comment section, follow me there. And please as well, if you've watched till the end, drop me a like and a comment down below. Those 2 things help me out absolutely massively, but you all already know that. I hope you all have an absolutely fantastic day. I will catch you all for tomorrow's video. Peace.